Hey guys, it's Jeff Trapp here with the Jeff Trapp Podcast, and I am so glad that you've decided to join me today. And I am so excited. We're coming up on the corporate tax deadline, the partnership tax deadline on September 15th, 2023. That's for the 2022 S Corps and partnerships. So if you are an S Corp or if you are a partnership, you need to make sure to get your tax documents in so you get those taxes filed and paid on time, because there are huge penalties if you don't file those returns on time. And, they are $210 per partner per month that those returns are late, or per shareholder up to 12 months. So that can be about a $2,500 penalty per partner or per shareholder if you file those returns late. So you want to stay on top of that. But I am so excited to be wrapping up that tax deadline here in just about a week. And another thing that happens right around September 15th is the third quarter estimated tax payments for 2023. So we're finishing up 2022, but we've also got to think about, hey, what's going on in 2023? So a few things that you want to know regarding the estimated tax payment, because, you might have to pay some taxes, but you don't want to have to pay penalties to the IRS, because, do you think the IRS spends your money better than you spend your money? Probably not, right? And so what you need to do is you need to figure out how much you should pay in estimated taxes to the IRS. And there's a number of different ways to pay that. And there's a number of different ways to figure that out. So if you're a business owner, you're going to want to get your financial statements up to date, probably all the way through August 31st, and figure out, okay, this is my income for the year. And then you need to determine, what your tax rate's going to be. And I'd encourage you to work with a financial professional who knows what they're doing, probably a certified tax strategist. We've got plenty here at the Tax Planning Pros, but if we're not your cup of tea, then, make sure that you reach out to somebody to help you pay the right amount, because you don't want to overpay your estimated tax payments, because that's like giving the government an interest-free loan for the year. Definitely don't want to do that. So you want to make sure you pay the right thing. But a lot of people don't know about estimated tax payments. And I want to go ahead and just kind of give a little bit of a background on estimated tax payments and some things that you should know that will help you as you get prepared for September 15th, 2023. Now, the IRS has 4 payment periods. Basically, you break up the year into 4 quarters and you make 4 payments throughout the year. And the payment dates that those are supposed to be made on are April 15th is the first one. That's the same days your taxes are due, if you don't know that. So April 15th, June 15th, in the middle of summer there, September 15th. And then they let you wait till after you've spent all your Christmas cash and holiday money, and you can make a payment on January 15th for the prior year. Now, there's a number of different ways to figure out your estimated taxes, and that's why you want to make sure you have your updated financials, what you're getting paid. If you're getting a W-2 maybe from your company that you have, maybe you've had certain life events, right? Like a marriage. When you married filing jointly, your tax rate goes down. When you have a child, you get tax credits. So all of these different things will affect your taxes, right? So in general, you won't get a penalty if you owe less than $1,000 with your tax return. No penalty, right? Throughout the year, if you paid the smaller of 2 amounts, at least 90% of the tax for the current year. So if you've estimated within 90%, you won't get penalized. Or you pay 100% of the tax shown on the prior year return. And this can increase to 110% based upon adjusted gross income. Now, you might be able to get out of your penalty. There's some things that you can do, and the IRS may waive that penalty. You have to petition them, write a letter, write a sob story. If you underpaid because of unusual circumstances and not willful neglect. Willful neglect is like, I just forgot, I didn't have enough money in my bank account. So if you had a casualty, disaster, unusual situation, if you retired, when the estimated tax payments applied, or if you became disabled during the year. So you would have to petition the IRS. But there's a number of ways to pay. You can go ahead and get a Form 1040 ES voucher off the IRS website. You can get that from your tax preparer, or you can just go log on to the irs.gov and click the pay button, and they will take the money out of your account. They are so excited to do that. So I hope this helped you out for this upcoming tax year. If you have any questions, you can reach out to our team. We're more than happy to help in any way that we can. And, if you like this episode, or if you know any business owners that might find this episode helpful, please like, share, and subscribe. And once again, I'm Jeff Trapp with the Jeff Trapp Podcast, and thank you so much for joining me.